Hi, good morning, everyone. So, welcome to our daily briefing today. And today is December 3rd, which is Friday. So, let us begin our daily briefing by take a quick recap on previous important economic data. So, the first one is Australia retail sales month-on-month final October. So, previous is 1.3%, forecast is 4.9%, and the actual, which is 4.9%, same as the forecast. So, this doesn't really affect much to the Aussie dollar yesterday. And then we go to the next one, which is the Japan consumer confidence November. So previous is 39.2 and the actual is same 39.2, same as the previous. So this doesn't really affect much to the Japanese yens yesterday. So we go to the next one, which is the US initial jobless claims 27 November. So previous is 199,000 and the forecast is 240,000 and the actual is 222,000, which is lower than the forecast. So this is actually a good news for the US dollar. So let's take a look on the US or the market graph here. We can see that the US dollar went up yesterday because of this important economic data. And then we go to the next part, which is the previous day market volatility recap. So for gold, it's declined 190 pips. So what happened on the gold market yesterday? So let us read the factor here. So spot gold fell by more than 1% on Thursday, hitting $1761.97 per ounce, the lowest level since November 3rd. So because investors notice signs that US monetary policy seems to be hawkish, and these signs may curb the rise in inflation in the future. So this is actually a good news, a good sign for the US dollar. That's why the gold went down last night. Okay, then we go to the next one, which is the WTI crude oil. So it's declined 490 pips, then rebound again. So we can, as we can see that inside the red rectangle here in the market graph on the right side here. So what happened on the WTI market last night? So let's read the factor here. So crude oil prices climbed and US oil rebounded more than 7% to $67.37 per barrel in late trading. Okay, so OPEC Plus said that it is still in the middle of the conference and if necessary, the production policy can be adjusted temporarily. The organization previously agreed to add 400,000 barrels of crude oil to the global market as planned in January. Okay, so this is the reason why the crude oil fell and then it rise again. So after the announcement of the increase in production, New York crude oil fell sharply to $62.43 per ounce, per barrel. Okay, then we go to the next one, which is in today US session today we have to focus on this important economic data. So let us take a look on the first one, the most important one tonight. So which is the US NFP non-farm payrolls November. So previous is 531,000 and the forecast is 550,000 and the schedule is at 9:30 tonight. So if higher than expected reading should be taken as positive for the USD, while lower than expected reading should be taken as negative for the USD. And then we go to the next one, which is the US unemployment rate November. So previous is 4.6%, forecast is at 4.5%. Schedule is same at 9:30 tonight. So if higher than expected reading should be taken as negative, remember negative for the USD, and while a lower than expected reading should be taken as positive for the USD. Then we go to the next one, which is the Canada employment change November. So previous is 31.2 thousand, forecast is at 35,000, and the schedule is at same 9:30 o'clock tonight. So if higher than expected reading should be taken as positive for the CAD, while lower than expected reading should be taken as negative for the CAD. And then we go to the last one, which is the US ISM non-manufacturing PMI November. So the previous is 66.7, forecast is at 65. So the schedule is at 11 o'clock tonight. So if higher than expected reading should be taken as positive for the USD, while lower than expected reading should be taken as negative for the USD. And then we go to the last part of our daily briefing today, which is the market update for gold. The resistance level of today is 1781 and the support level of today is 1766. So my personal opinion, I will still take it as a bearish movement since Wednesday. Wednesday bearish, so yesterday also bearish. For today, I will also take it as a bearish movement prediction. Okay, so why? Let's read the factors here. So the increase in the number of initial jobless claims in the United States last week was lower than expected. indicating a tightening of the labor market, and the number of layoffs in November fell to the lowest levels in 28 and a half years, almost 30 years. So this is a very good sign for the labor market in the United States. As the labor market continues to improve, the market is continuing to bet on the Fed's earlier tightening, which is always pressure on gold prices. And news of the epidemic will continue to provide a certain degree of hedging support for gold prices. This epidemic is talk about the virus, the Omicron, the new variant virus. Okay, so in the short term, the price of gold will continue to be a game and seesaw between the two, which is the Fed's earlier tightening and also the Omicron virus. Okay, so which is generally unfavorable for the gold bulls. So focus on the NFP employment data today. So it is currently generally expected to be between 500,000 and 600,000. So 500,000 and 600,000. So which may be negative for the gold prices and bullish for the US dollar. So in addition, ISM non-manufacturing PMIs is also worthy of attention. So that's all for our daily briefing today. So TGIF everyone, and enjoy your weekend and see you again. Bye bye.